Gautam, you were making the point of the budget being around and volatility potentially being a factor here. If you could complete that point.
Yeah, I think there could definitely be some volatility because you have earnings and budget both kicking in over the next few weeks. But I don't think it's really going to hamper this bull market in any way because I think the budget might just aid the bull market even more. So I do believe that the momentum is strong, and the four sector preferences that we have are banks, metals, pharma, and FMCG. And I think even at these prices, the risk reward is excellent. I think one tends to feel a little jittery looking at numbers, but I just overheard you talking about the Nifty PE. If you're going to be trading at 23 times FY25 earnings, logically in the past, we've topped out when we've hit PEs of 27 and 28. So when you look at absolute numbers, it just doesn't, join the dots. So, and that's probably the reason we feel that there is a lot more headroom on the upside.
Gautam, in terms of, you talked about your top sectors, but we just pointed out that the broader markets are lagging right now. This is more of a Nifty story. Do you see that rotational play coming in the context of the budget? What about some pockets which have really overrun? And would you say stay away right now? If I'm talking railways, I'm talking defense, all of the usual suspects which, seem to jump up at every hint of a policy push?
Well, it's actually quite interesting that in the last 15 days, PSU stocks in general haven't done as well.
Yeah.
I mean, when I speak to a lot of people on the street, they say that, the momentum is not there. And they're complaining that many of these poster boys of the past haven't done well. So it's about whether you look at markets half glass full or half glass empty. I think it's great that the FIs are back. It's great that the large caps are back. And I do believe that that's the bigger opportunity right now. There is no doubt that there are many pockets in mid caps and small caps that are extremely overvalued. And it's just the greater fool's theory or the momentum that's playing out. So take profits in those pockets, be comfortable and move to the more structurally strong large caps where I feel you could get mid cap returns over the next 6 to 12 months.
Any more specifics you can add to that? Which are the large caps which could give us mid-cap like returns in the next 6 to 12 months?
Well, honestly, HDFC Bank being up 15% itself is quite a game changer. And I do believe that, this stock single-handedly can keep the market firm over the next 3 to 6 months. I do have lofty targets of as high as 20 to 50, and I do see that stock getting there. In the NBFC space, I think Bajaj Finance looks very interesting. I had the opportunity to hear Rajiv Jain, in the last few days. An incredible story. Stock is coming out of 2.5 years of underperformance. Should do very well from current levels. So that looks great. Reliance sustaining above 3,000 is great news. ITC at 410, 420, I think is a great story. And not to miss pharma, the likes of Sun Pharma, Cipla, Divi's Lab, Dr. Reddy's. They're all looking very good. And in the metals pack, the Tata Steel, JSW Steel, JSPL, I think they are also wonderful stories. So I just give you a handful of 10, 12 names which we like structurally for the next 6 to 12 months.